Afternoon, everybody. Welcome to the Friday edition, the weekend edition of the TraderMerlin show. Seems weird to only do 2 shows in a week and feel like I'm already at the weekend. So we are going with, what are we doing today? Elijah Craig Small Batch Bourbon today is the choice. So salute, everybody. Salute, Jimmy. All of you had a great trading week, and even though it was kind of an ugly week to end, cheers. I will have a nice sip. Hey, Tom, good to see you. I thought I might have lost you, buddy. All right, so with the graphic today, I was actually going to do one of 2 different graphics. I thought, well, I'll continue with the AI type of stuff, which of course is this nice bear here, punching in a few keyboard strokes. But let me, I didn't actually get to build it yet, but I thought maybe I would take the time here on our weekend edition to real quickly just show you what I wanted to do with the trading week wrap up. So hold on a second here. This is going to be all done impromptu and live. That's fine. I wanted to do one that looked somewhat like this. Now, of course, if you follow what the weekly chart of the markets look like, it wasn't a very good week. So there's a lot of volatility, a lot of chop, I think a lot of expectations about what might be happening with regards to interest rates next week. But at the end of the day, hold on, I'm drawing as we speak, so bear with me, everybody. I know I should have done this earlier, but I didn't. Here is the candle for today, and we will now bring that to this screen. And this is what you guys are going to end up with, at least for today. Hold on a sec. Make that black, make that wider, and this is what I was going to call the show today. I literally going to have this one candle. There you go. I was going to have this one candle, and off to the side, I was just going to say trading week wrap up with me looking all smug. I haven't done a blank screen like this in a long time. But anyway, this is what I was going to try to do for the thumbnail for today. But I decided, you know what? I'm gonna go with the normal one. I'm going to go with the graphic like this. So anyway, the reason I chose that candle is, of course, if you look at what happened in today's markets, you had an abrupt about face. I kind of felt this was coming, especially I think people are very underestimating the impacts of the CPI on Wednesday and the PPI number on Thursday. I think that was a big factor for what we saw today. So I'm going to dive into that real quick, though. Let me get to Tom's question. He said, United Auto Workers get sub-pay while on strike, and they may also get unemployment based on memories from decades ago. Yeah, not sure on that, but it was... From what I saw, it was only like 13,000 or 18,000 people went on strike today out of the 360,000 auto workers. So while it sounds bad that the strike started, this is a drop in the bucket. If they all collectively get together, they'll probably have much more collective power, as unions typically do. The discussion we had yesterday, I still stand by. I think that this may not be as impactful as a UPS going on strike simply because the global reach of UPS was much bigger. It impacts every single one of us, whereas if the Auto Workers Union goes on strike, how's that really impacting me here in Southern California? Sure, I may not be able to get my new Jeep Wrangler or my GM truck or Ford truck or vehicle, whatever, but that doesn't really impact me directly and monetarily. But those people in those regional areas where they do assemble these vehicles, again, it's Dearborn, Michigan, Detroit, Michigan, you have some parts of Alabama, Tennessee, they could be significantly impacted. So we'll see how it goes going forward, but I don't think it's as market damaging potential as something like the UPS strike was going. Tom says bigger manufacturing companies have learned how to not get unionized. I work at Steelcase, and they paid UAW level wages and treat employees very well. Yeah, right. Just pay them the wage that the unions do, but don't lock into the union stuff. Anyway, we won't go through a work show today. I'm back, Big Eb. It was a good time, definitely a good time. It's funny, a lot of people have remarked that I didn't really get that tan. Since I have vitiligo, I was fighting to stay in the shade almost the entire time I was in Jamaica. And it's weird, when I finally went out and went snorkeling and did excursions, there was really heavy cloud cover, so I really didn't get burned at all. Anyway, let's go away from that and start with our weekly roundup. I'm going to actually do the daily roundup. We'll go from bottom to top. I have one question that came through last 48 hours or 24 hours, which is kind of a no-brainer in my opinion, kind of a weird one. But I will get to as many as the questions as I can as they come through here today. I got hammered on my SPY puts yesterday. I got back in. Yeah, I got stopped out on my SPY puts, but I still held my Russells and did well on that one today. So let me just start off with what happened out there today. You can see the weekly time frame here. This is a daily chart, by the way, but just look at the last 5 trading sessions, right? You really had a lot of chop this week, and all of a sudden for the NASDAQ on Friday, big down day, right? You're looking at 1.83% slide. Now, I'm curious. Let me see if I can do a poll here just for fun. Let's go and add a poll. And let's see what I want the question today. Will Apple suffer from the new iPhone? All right, so I'm going to put this poll up, and I'm curious what you guys think. I don't know if you saw the release. So Apple's making this big hoopla about their new iPhone, and when you look at it at face value, there was like really not a lot of changes here. You know, a lot of times they'll introduce a new look, a new feel, a new shape, a new feature, a new function. It has none of that except it's slightly small. I believe it's 1/10 of an ounce smaller or lighter. And it has a different power cable now, or you have to buy the special power cable for $29. Now, of course, you're going to have the Apple fanatics that jump on board and are going to buy it no matter what. It doesn't matter. You have to have the new one. I'm lucky, I feel like, because I bought the 14 Pro and locked into a 2-year contract on it. I'm glad because this new phone looks like nothing different. So my question and concern, and I'll let this poll go for just a little bit on, if you guys are in the chat right now, hit that poll question I have going. I'm curious to see what you guys think. And again, there is no right or wrong answer here, right? It's just what's your opinion? What do you feel is going to happen? I'll give you my 2 cents, and then feel free to type in the chat your responses. It feels to me like if Apple has really done nothing from an upgrade perspective, not created that incremental demand or excitement for the new product, other than it's just a new version of the old one, I don't see sales being as high. There was a couple polls I read where people asked, are you going to buy the new iPhone 15? And it's right around 85% of people saying, no, I'm not going to buy the new one. And my concern is if we do start to see in the next quarter, like going into the tail end of the year as we get to Q3 and Q4 wrapping up, if the sales of that 15 are that lackluster, that could have a pretty big impact on Apple's overall bottom line. And if that happens, I think that you could see a lot more pain to the south side. So let me see what the results of the poll are. And the poll. So the poll for the podcasters out there that are listening to the podcast right now is, will Apple suffer from the new iPhone? 60% saying no, 40% saying yes. I'm putting myself in the yes category. It's getting so much negative press right now. I can't see people rushing out or waiting in line to buy that iPhone when it's released. So why did I start with that? Well, let's go look at the chart of Apple here to start, and then we'll go into the tech side of things. You know, Apple, obviously, from that 190 peak we saw on September 1st, has had a pretty, I would say, a substantial fall, although it seems to have based here just a little bit. Now, for everybody that follows Online Trading Academy's kind of market perspective and the way that we look at things, it is the trend is your friend until the bend of the friend. Actually, I don't even know if that's Online Trading Academy. That's my mantra. If I ever started my own school, the tagline would be, the trend is your friend until the bend at the end. And I know that's something that some instructors talk at OTA, which is definitely not all of their perspective, but it certainly is mine. With OTA, it's about just finding supply and demand zones, right? Well, in this case, if I'm looking at this chart that you see on your screen right now, my bias should be one direction and one direction only. This is a gorgeous looking uptrend for the podcasters. I'm showing the price chart from late 2022. It sold off a little bit into a low right around 125. And then Apple has been on just a gorgeous uptrend going all the way into August of this year. And then we had that big pullback. Okay, fine. It's still an uptrend in my opinion, right? It's still in an uptrend. It's just a big pullback. But in order for this to really continue this trend that we've enjoyed since 2023, it needs to break that high of 196. Well, notice we rallied up, we only got to 190, and now we're back at the lows. So this, to me, I personally think is a turning point. I think that Apple is all of a sudden starting to face some headwinds here, whether that's production issues from China and supply chain disruption, whether that is legal issues and regulatory issues from China saying, hey, can't use Apple phones in government buildings, that might get worse. Or is it just outright people looking to not spend $1,000 on another phone that's exactly like the previous one? I personally think Apple is headed for more downside movement here. And I will put a little line there. You know, I probably should have said this earlier, but, you know, here we are today trading at 175. Now, I think that by the end of this year, Apple will be lower, and the question is how much lower. If it does break these most recent lows at 172, what that ushers in is a whole new set of sellers because it's now officially starting to make new lows. It's officially going to be on a downtrend, right? And that pivot low will be broken. Now we're looking at getting lower and lower and lower. Oh, the iPhone 15 is made in China, or made in India. All the components, probably not all of the components, but either way, demand, I think, for the 15 will be much lower than anticipated, and that should cause Apple to drop. Remember, it is the heaviest weighted component of the NASDAQ, which is why I brought this topic up. NASDAQ, as you can see here, has been off of its highs. I think that this peak sell-off that we saw back starting on July 19th was triggered kind of in conjunction with Apple. Open up the Indian market, that could definitely do it if they're going to get a lot more product from India, which would be great for India and bad for China. It's just we're at peak Apple iPhone. I think so. Tracy, good point. I think we're at peak Apple iPhone. Unless you're like Larry, who I think's got like 3 different phones. I only need one. Unless you need that second one, that's fine. But I'm hoping most people are taking better control of their finances and realize that I don't need to be buying this phone every year, right? I'll probably have this one for the next 2 or 3 years, as long as it doesn't crap out on me. And I'm under contract for another year. So, yeah, I certainly will not be a buyer, but I'm probably one of the more frugal people out there. $1,000 every year for a phone, not worth it. Apple is booming because of their wearables. Yeah, their pods, those little devices, stuff like that. They're definitely that's helping out. But if they just don't sell the iPhones like they needed to, I think that's going to cause more downside movement. So Apple's been very good at always evolving and having different revenue streams and ways to bring in capital, whether that's through their app store or some other technology device. But Apple still is, bringing a lot of money from their iPhones, and just that the numbers declining will spook Wall Street, I think, and that could be a bigger sell-off here. Big Ed says, Apple's valuations are currently higher than historic norms, even with the pullback. I saw some of the statistics. I wish I would have grabbed some screenshots. I forgot it. I was scrolling through Twitter, and somebody actually had those stats out there and showing Apple compared to its historical norms. We're above on so many different metrics. I think it's just overbought. And so as we see that, and that's one of the main reasons I'm still holding short my Russell, plus it didn't stop me out, I may actually look at going short on the NASDAQ here as well, but I might be a little late on that one. So let's walk through overall what's going on. Apple's showing a bit of weakness, and NASDAQ today down 1.7. Well, it was actually down a little bit more. Looks like it's moving up in just in this last couple minutes I was talking, but down 1.79%, erasing almost all of this week's gains. Actually, erasing all of this week's gains, making it one of the worst performers on the day. S&P also having a pretty ugly, I guess you would call that the devil candle. Some people call it a God candle if it's this giant up candle. But no one ever has a name for the downside. We'll call it the devil candle. There's your devil candle today. It's an engulfing candle that literally eats up 5 days worth of trading. That is a very bad sign going into the weekend, finishing near the dead lows. Again, I believe a lot of this is triggered by the spooking of the markets to the CPI and PPI numbers that came out over the past couple days, and the realization that there might be a rate increase. I know the odds are so against it, but the odds were against the European Union also increasing rates by 25 basis points. And they went from 4.25%, where they were supposed to stay. Everyone said, we're going to hold right here. Jump to 4.50. U.S. could easily do the same thing, and I think that the uncertainty of it, because that inflation data has markets spooked a little bit. So there was your S&P down 1.25%, finishing just below 4,500, 44.98 on the day. You've got this gap that happened about a week ago on the S&P futures, right? Going from that Thursday to your Friday session, you had a little jump up. I think that's contract rollover, but who knows? That little unfilled gap there on that futures contract may fill as well. Russell, the one I'm still holding, did an about face and erased almost all of yesterday's gains, which is great for me. If you notice the IWM, so I am underwater on, how many did I have? 20 or 4, I think 20. So I now am long 2,000 shares of IWM, which I will be selling calls against Monday morning. I bought puts and I also sold puts, which is, my own version of a spread trade out there, Tom. So I'm doing it, but on my own terms, buddy. Think it's more due to the strike? I don't think so, Pepe. I don't think that this sell-off today was because of the strike. It's not that many people, right? It was 13 or 18,000 people went on strike today. Now, it could be much worse, but remember, I don't believe that strike is going to be that piece that impacts all of our lives. UPS does, because we're getting goods and services. Companies wouldn't be able to send packages around. That would be way more devastating. This is just regionalized jobs in specific parts of the country, which could get hit. But again, unless you're trying to buy a new vehicle, this is not that big of a deal from a consumer's perspective, right? From a consumer perspective, an auto strike isn't going to really hit people that broadly. There might be trickle-down economic effects from the unemployment that, or just the lack of income that's come through, but I don't know. Les says, Merlin, do you think that the markets are anticipating the government shutdown at the end of the month? That's another possible factor. I think that that's going to continue to get worse and worse. Every time we get to those deadlines of a government shutdown, I think that it's going to continue to escalate this discussion of we have to cut spending. It'll polarize the divide between Democrats and Republicans, and I think it's just going to continue to get worse and worse and worse. Ultimately, what will probably happen at some point will need to be a colossal rehab of government and a restructuring of almost every department and getting rid of a lot of stuff we don't need, which means bigger unemployment, right? If we actually fix the problem, which has been this money-sucking beast we call government, if we fix it, you got to get rid of the pieces that are costing a lot of money. And that's a lot of jobs, which means unemployment could surge. That's always a real possibility. The other possibility, which is the super long shot, is that we default on our debt, and then that creates a way worse situation for the U.S. So either way, I don't think it's going to be a good scenario going forward for the U.S. markets with a debt ceiling, with potential government shutdowns, with layoffs that might be coming here, not just the auto workers, but in other industry sectors, which is why I stand by my call from January, which said first quarter up, second quarter flat, third and fourth quarter down. I was wrong. I had first quarter right. Second quarter was way up. I was wrong there. Third quarter, the verdict is still out. And then fourth quarter, we shall see here soon. Strikes at a few engine plants, transmission plants, and other critical facilities could shut down most of the assembly plants. Correct. So you could see a ripple effect, right? But unless I'm wrong, correct me if I'm wrong. I'm not the omnipotent one here. But if all of a sudden all those pieces that are designed for a vehicle, right, radiators and rims and stick shifts and all the gadgets, if all of that supply chain starts to become disrupted, yes, there's going to be impacts to the businesses directly tied to automotive, which of course in the US is a pretty big industry. But from impacting the markets overall, I just don't see it being as impactful as a UPS strike. That's all I'm saying. Not that it's zero impact for us, and certainly will cause some trepidation for long-term investors for our markets going forward, but I'm not that worried about it yet. We'll see if it continues to get bigger and bigger and bigger, and if all 300,000-400,000 auto workers strike and it goes prolonged, then it's going to certainly have a drag on the economy, but I don't think that today's reaction is that. I think today's reaction is more Fed related. And, we do have just less than a week until Jerome Powell on Wednesday at 2 p.m. Eastern time makes his comment about the rate announcement, as well as the press conference afterwards, which should be really exciting. Oh, I can't wait for that one. Let's see, PB&J, 40% raise over 4 years and getting paid for 40 hours while working 32. What could go wrong? Right. I saw that comment that they want to get paid 40 hours for working 32. So does everybody, bud. I want to get paid 40 hours and work one. I mean, why not? Let's see. Let's continue on here. So I had the Russell 2000 again. This is the week. This is the ETF IWM, which you can see for the week really hasn't done much, but finishing on a low note. If we look at the futures, a little bit better looking picture, but again, a lot of that given back. I am keeping this head and shoulders pattern on here because I do think we're going to get lower on Russell, which is obviously why I'm keeping some of that some of my position open. I'm actually waiting for it. If we can get down below some of these lower levels, particularly this neckline, which is this sloped gray line here, I'll probably add to my position. I have the November expirations. I won't be adding anything to my position past October 17th. That's obviously when I'll be closing out the position at the latest, since I have the November 17th. Okay, Bitcoin. So you have a bearish Harami formation on Bitcoin today. For the week, actually looked pretty good. It was one of the few that was actually positive for the week. Today down 1.08%, 26,475. Now, if you guys watch Monday Morning Must Knows for Online Trading Academy, I'd encourage you to check that one out, although I'm going to probably spoil it right now for you. I'm going to talk in that one about the problem for crypto going forward. And before I dive into that, I need to have another sip of whiskey because it's going to be one of those kind of topics where it's like, uh-oh, this could be bad. All right, so if you look at the crypto world, obviously it's been struggling. Regulatory issues are the main focus. However, there's something coming up here. Actually, it happened this week on Wednesday that I think is noteworthy for anybody who's in that crypto space. And Big Eb, I know you're in that crypto space as well. And this might be one that makes you a little nervous, which it probably should. FTX, which was one of the largest exchanges out there, of course, run by Sam Bankman-Fried, who is now in jail, which rightfully so. He should be in jail, probably with several other of these founders of scam exchanges or projects. They have a lot of crypto. FTX has billions of dollars worth of crypto, over $2 billion worth of crypto. I think it's actually closer to $2.5 billion. And on Wednesday, a federal judge said, you can start to sell those holdings in order to pay your creditors. Now, just to put this in a perspective, if you did a market order to sell $2 billion worth of anything, you're going to crash a market. You're going to set off circuit breakers and headline news of, holy crap, this is crazy how quickly things could fall. Right now, FTX has over $1.1 billion worth of Solana tokens alone. Now, I do own Solana. Let me bring up the chart of Solana here. This is one that's got me nervous going into the weekend. I don't have a big position. It's way down my list as far as position sizes. But here's Solana's chart. And it's been drifting lower and lower and lower for the past couple months. Right? We actually peaked here at 31, almost $32 back on July 14th, and now we're at 18. So you're almost a 50% slide in just a couple of months on Solana. And I think a lot of this has to do with people realizing this moment was coming. I knew it was going to come. I thought it would be a little bit further down the road. So right now we are at a point where Solana can now, or FTX can now sell this $1.16 billion position of Solana tokens, and that could really have a dramatic impact on price moving to the south side. Yeah, good, Pepe. If you also look at their position holdings, they have number 2 was $500 million worth of Bitcoin. I think $200 million worth of Ethereum and Aptos and USDT and Ripple. So they've got a lot of different tokens out there. Keep your eye on it. I think over the next couple weeks, I'll be watching the headlines, seeing if FTX is actually unloading, because there's a lot of data tracking sites which will look at their portfolios and see what is actually moving from FTX. My hope and wish and belief is it will be a slow, orderly sell-off of assets. In the worst case scenario, it's you get some amateur trader out there that says, oh, we want to sell the whole position. They hit a market sell button, and you will see this market absolutely implode for different cryptos. For example, if somebody sold $1.16 billion worth of Solana right now, Solana could easily drop from $18 to single digits in 1 minute candle. The reason for that is, depending on which exchange they're selling it on, there may not be enough liquidity for it to absorb a $1 billion transaction. But they'll most likely feed it out very slowly. Anyway, I wanted to really quickly just share that with you, because I think it's a very noteworthy piece for our markets going forward, and could create a lot of problems for those of us in the crypto space. All right, what did I miss? Tom says true markets and what happens in the real world can be quite disconnected. Absolutely. Pepe says military is getting proposed to pay increase next year of 5.2%, and I think it's too much. Salary is over 60%. Hey, 5.2% is not bad. Now, 5.2 is okay, right? It's the CEOs who go from making $1 million 1 year to all of a sudden $50 million in bonuses the next. That's a problem. Pepe says time to buy more, I guess. Yeah, possibly. Yep, I agree with you, Big Ab. Maybe a buying opportunity. It might be, but I just want to throw it out there because some people may not know that this massive pool of liquidity is coming to market as we speak. Oh no, they can move Solana charts. Anybody can move a Solana chart. Big Ab, I'm kind of with you at this point. I'm only adding Bitcoin and Ethereum. At this moment, that's all I'm doing as well. Although I will say that if I do see Solana get to single digits, or get down below, let's say $10, I'll probably buy some more Solana. I think Solana's going to do okay in the long run. All right, I got a couple more things here to talk about, then I'll go to a listener question, and then we'll wrap things up for the weekend. So I don't know why this list got switched around. I did it in alphabetical order. We were on Bitcoin. There's your Bitcoin chart. Technically, not really much to speak of other than the little Harami formation we have formed today. Dollar index, still going. Energizer Bunny here. Now, it was a hanging man formation today. Hanging man, for those of you who might remember, is a small real body with a long bottoming tail. It's basically a hammer formation, but at the top of an uptrend. According to Steve Nissen, who wrote the book on Japanese candlesticks, this is a reversal pattern. I personally think it's a bullish pattern. we'll have to see who wins that war. But dollar still looking very strong. I was really shocked to see our markets rally yesterday with the dollar rallying and today giving back a lot with not much move in the dollar. Very weird disconnect going on. All right, podium time. The reason I got stopped out of my XLE position is oil just keeps on running. Oil today making higher highs. You had a $90.77 close today for crude oil, up 0.68%. I mentioned this a while back. I think I did this in Monday Morning Must-Knows a couple weeks ago, where I talked about if you got OPEC making cuts, the only one who's really increasing supply is Iran, and I think was Venezuela. Everybody else is cutting. Russia's cutting, Kuwait's cutting, Saudi Arabia's cutting. They want to keep cutting because they want oil to be as high as possible. The only people who could really complain about oil being really high are the ones that are consuming it the most, which is the United States. Even though we're the number one producer of oil in the world, we still consume more than we produce, so we have to import from other countries, and that's part of the problem here. So crude oil most likely will continue to the upside. If we look at this chart here of crude oil, you got to zoom out to a weekly to kind of say, well, where are we headed to next? Well, I think it's pretty clear that little red horizontal line at right around 93 bucks, I would say, would probably be a pretty good one for crude oil, and that's my next target, right around 93 bucks, which of course is about $2.30 higher than where we are today. So roughly a 2.5% move to get to that level, which shouldn't be that difficult. All right, back to the daily time frame to our gold chart. I'm very happy to have that pop in silver today, even though I did get exercised. I had 40 puts I sold at 21.50. So I got exercised today on SLV right around, 1916. We'll see what happens on Monday morning. I'll sell calls against that position. Continue that. The wheel in the sky keeps on turning. All right. Gold on the day. Gold up 0.69%, 1946. Again, I look at the picture here. Even though it was a nice up day, I'm still not that confident on gold. It's making a descending triangle, and I have that line drawn for a reason. Again, I like these types of formations because they'll usually continue until they don't. I know it sounds moronic, but that's the truth of the matter, and right now gold is holding to it. It's compressing. We're seeing ranges get a little bit smaller. We're seeing price action become a little bit more muted, and we're basing right around 1900. So if it holds, fine, great. What we need to do is break this downtrend line, maybe get back above a more recent pivot high like 1980 would be the next level I'd look at to really be happy about going long on gold, but it was a decent day for gold. And finally, the yield. We're right back up to that level we've been talking about in this program, 4.335%. Right at it today. I mentioned that number months ago as being my logical target because it was the peak we saw all the way back here on the 21st of October of last year. We're coming up on a 1-year anniversary, and we're right back to where it is. From that picture there, that is it's an ascending triangle formation. That is bullish to the upside. Yeah, it does look like SLV wants to go up, and again, I have a significantly big position in silver. I do like the fact we based a little bit bummed yesterday. I was talking on the show that I kind of wanted to sell some puts. I was looking at selling some puts at the 2050 level today, but we gapped up, and unfortunately, that opportunity slipped away. I should have done it yesterday, but as you guys all know, 3 words that mean nothing in the world of trading: should have, could have, and would have. If you look at this price chart here, there are a lot of unfilled gaps on SLV. If we get back up towards that 23 mark, which I think we may be headed towards, all of the long positions, and again, I have some significant positions in SLV right now, all with call options written against it, except for one that I was put today, which I will sell calls against on Monday. We'll see how we stand there. But all in all, looks pretty good. Michael says, Dish has been doing great until today, which I know you don't like. No, it's not that I don't like something. It's not that I don't like it. My negativity comes from I'm looking at a company and thinking, is Dish going to do great because of their business model? And if they are, what's the competition? And I think that one of the sharpest, craziest, weirdest men out there, Elon Musk, I think what he's doing with Starlink is going to put Dish out of business. I just don't see. I think Elon Musk is going to destroy Dish just with Starlink. Right now, it's going to be an internet-based thing. Pretty soon, he'll put broadcasting on it and do everything he needs to, and he'll probably have the biggest communication network out there. So that's my only real reason for Dish. Otherwise, I don't care. Dish is fine. I mean, use Dish if you want to use the services. But as we look at these price charts here, I don't really care about whatever service it is. I care about is this going to move to the upside? Now, we did have a little bit of a run, as you mentioned, with Dish. It went from 590, rallied up to a high today of right around 690. So you had a $1 move over the past 2 weeks. That percentage-wise, that's phenomenal. That's great. But I still don't like the chart. Right? The chart is still making lower lows, lower highs. So I'd rather be in something that's going to has a higher probability of moving in my direction. And then you also talk about PAGs quite a bit. I'm curious, Michael, how many positions you have. And again, I'm not picking on you, but I just, for your own, out of curiosity, it sounds like you have a lot of different positions open. I'd be curious to know, if you can be totally honest, how many of let's say you've got 20 positions open, how many of those positions are underwater, meaning you're actually losing on right now? Because a lot of the stuff that you mentioned, you've given me a lot of support in saying, hey, there's some good data, yada, yada, there's this, there's that, there's the other thing, which are the arguments you have for a bullish market. But most of the charts that you've mentioned look like this: lower lows, lower highs, not much upside potential there. So I'm just kind of curious. I think that my assumption would be that you have quite a few positions that are underwater right now, and that may change, right? You may hit it, and all of a sudden this PAG Seguro rips to the upside and hits 14, 16, and you win big on those. But I would make the argument that you're focusing on the wrong things. It looks like you're doing value plays and becoming a value investor. I would say find something that's got a good trend on it and go with that trend. Yep, I got your comment shares. Right, bottom fishing. Bottom fishing is dangerous, man. Especially if my thought comes true, which I don't think is going to happen this year or next year. But I think what will happen is I think that Dish is going to be a slow death. Their business model was a great model. I can get telecommunications from a satellite. I can go anywhere in the world and get my TV. Well, now Elon Musk has said you can have internet anywhere in the world. And now a lot of people are using internet services to stream their media. I use YouTube TV. Right? I don't have a cable provider anymore. I have fiber optic internet, and I use all my TV through that. And I think that's really where more people are going. You look at something like Cox Cable, you look at DirecTV. These are some very expensive platforms that I have to pay fat monthly fees for. I think a lot of you as well have moved away from that, and you're probably you've got an internet connection and you're using some streaming service like a Netflix or Amazon Prime. YouTube TV is what I'm using. I don't know. I just don't see Dish coming back and surviving. I don't like those highs getting lower and some price compression. I'm with you, Kevin. I think that ultimately what you get there is that compression keeps going, and then people realize it's not going up, and they finally give up, and then you get to drop to the next big level. Oh, Dish has Sling. Okay. I'll give you the Sling piece. That's good. Fire 6, another piece, but it just bolsters my argument that if Elon Musk can get that satellite around the world, and mind you, you may not notice, but he's launching hundreds and hundreds of satellites into space. I read something like the last one had like 27 satellites on. Last rocket he sent up had 27 satellites or some weird number like that. I was like, wow. I see the SpaceX launches from Vandenberg, and they're launching more and more and more and more. Eventually, he will have a global coverage satellite network, and I think that's going to be the undoing for things like Dish, and that may actually hurt things like AT&T, who I get my fiber optic through. But you also have Google Fiber, right? The fiber optic's great, faster than you're going to get with satellite, but satellite might be much cheaper. And then, of course, I think the big benefit of satellite is it allows people who are in remote parts of the world have no access, like I did in Jamaica, horrible access to internet. That may all change, and all of a sudden we see things getting better and better and better with satellite. So anyway, cheers to Elon Musk and his continually trying to make money off of making the world a better place, I guess. All right, I use Cable Watch Prime. Cool. Finally cut the cord of DirecTV, best decision ever made. Michelle, it's funny you say that because I had a $170 a month bill with DirecTV. I was like, what? This is $170 a month. I mean, that's a lot of money. You're talking $12,000, $13,000 a year. That's just too much. So, actually, not $12,000, not $30,000, $1,300 a year. Sorry, big difference there. So I cut that, and instead of $170 a month, I have fiber. I I have a gig fiber line here, which I got because I want to run this show. I need fast uploading, and hopefully there's been no latency issues. Ever since I got that, this show has been pretty stable. I haven't had any crashes. I upgraded this computer, so we've been pretty stable except for a couple audio problems. But I'm using that line multi-purpose, right? It's a business expense because I write off expenses for the show, which is great for me. But, at the time I got it was $79 a month. And then I already had Amazon Prime, so now I watch stuff through Prime. Maybe I'll add on Netflix, but I'm still nowhere close to my total that I was paying for DirecTV, and I feel like I get way more money, way more programming than I did with DirecTV. So yeah, I thought it was a great idea as well. I don't have cable TV for the last 5 years. All apps, change subscriptions as needed. Good. And it's interesting that you say that. I think the real goal would be to have no TV, period, because it's an absolute waste of time. Television is a waste of time. It's a brain suck. You'd be better off I try to spend more time actually on things like YouTube, researching and studying and learning about things like, consensus mechanisms and bizarre crypto protocols, and just learning more and more about the world and life, and maybe languages as well. All right. That was weird and philosophical. Anyway, that was our top 7. Let me go to one last little piece here I want to bring up, because we are seeing the gap change a little bit, but we talked about that inversion of the yield curve, which, by the way, is the longest it's been. This is the longest inversion we've had in maybe ever. I don't know how far back we go, but on Dish, BlackRock Incorporated and co-founder bought millions of shares, and fundamentals on Dish is better than AT&T. It's funny. One little thing I'll give you, Michael, and others out there. There was a guy who was, let me see if I can remember his name. He was the CEO of Chesapeake Energy. Aubrey McClendon. Wow, that's a tough name. Aubrey McClendon. Now, the reason I bring this up is Michael says, on Dish, BlackRock and the co-founder both bought millions of shares, and fundamentals of Dish is better than AT&T. Great. If that's how you want to make your decisions, I can't argue that. However, I do recall a period of time where Aubrey McClendon, who was the CEO of Dish, of Chesapeake Energy, was buying hundreds of millions of dollars worth of the company's shares. And it just kept going up and up and up. And unfortunately, they filed a bankruptcy, so the data's all gone. Yeah, you can see here on the chart, Chesapeake Energy, they did a bankruptcy thing back in, restarted in 2021. But what happened is it went parabolic. And we have this belief system that just because a CEO or somebody is investing in a company that they're correct, right? You would assume that an insider buying shares of a company is making the right choice. However, with Aubrey McClendon and Chesapeake Energy, he was buying and I watched every month the numbers come through. I'm like, holy cow, this guy's loading up. So what did I do? I bought into that hype and that belief that he knows something. Come to find out, he was just over-leveraging himself. He was borrowing money out of the company, buying all these shares, and creating this over-leveraged loop like a lot of people did with the housing market back in 2008. Then, Chesapeake had a little bit of a pullback. Nothing major, but let's say a 10% pullback. And because of that, it triggered his margin call for his positions, because he just bought so much and so much and so much and so much that he was leveraged to the hilt. Every penny he had, he was buying more shares. Now, it may have worked out for him. However, it fell enough that he was force liquidated his positions. And what happened is they didn't sell it all, right? They just sell a bunch to meet the margin call. So let's say he's got 100 million shares. We'll sell 500,000 shares just to cover the margin call. Well, when they sell it, what happens to the price of that stock? It drops another 5%. And the snowball went on, and there was something like an 80 or 90% crash in the price of Chesapeake Energy simply because of Aubrey McClendon being forced sold on a margin call. So to me, that was a lesson where I don't believe it. I don't trust. If I read a headline that so-and-so is buying, I don't believe it. I don't care, right? It's really all that matters is this chart. When I can look at something like this and make my decision, because I sound like a bitter cynic, and I apologize for it, but I think that everybody in the financial space is lying. I start with that assumption, and you have to prove to me that you're being honest and truthful. Otherwise, you're all lying in the financial world. CEOs, TV experts, traders, you name it, I think I start with the assumption they're all lying through their teeth. And that's because I've been in this industry so long. I see the games that are played. I see the use of media to manipulate investors. I see scumbags like my Chicago trader who made all these great claims and come to find out when the curtain was pulled back because regulators investigated his accounts and subpoenaed his trading records, found out he's a loser. I mean, how are you supposed to trust? We did this conversation with Don Fraun on his program the other day. It's like, what do you believe? What do you trust? And I just trust price action. Margaret says, where is he now? Aubrey McLennan committed suicide. Killed himself. Yeah. Crazy. Horrible story. Tragic. But again, don't believe anybody else. Don't even believe me. Trust but verify. Do your own research. Do your own analysis. Make sure you're careful. But if I'm looking at a Yahoo headline about a company, a product, or research, I don't believe any of it. I do not believe any of it. I'm going to move on. Big Eb has the important question, though. He says, Appleton Estate and red stripes this past week. Yes, a lot of red stripes. I like red stripe, especially the bullet can. I did have some Appleton Estate. The place I stayed at was open bar, right? Unlimited, all you can drink. And this group of people we met, they're like, oh, you want to take some shots? Great. And I didn't realize they were giving us overproof rum, which is 160 proof. Brutal. Like, you could light this stuff on fire. No idea. And I wish there was a video of us taking these shots, because if anybody here has had a shot of overproof, like Everclear or something, when that goes down, you can't make a pretty face. Like, I can have the sip of this Elijah Craig small batch whiskey, and I can enjoy the flavors. With that overproof, you're like, oh, wow, everyone just puckered up. So yeah, we did have some Appleton Estate. I didn't bring any back, but yes, definitely had a lot of that stuff. And let's see. So I had two questions I want to get to. One was this, which I'm just going to address very quickly. PTCT, a buy at demand. That's from Tom. I'm assuming that's not Tom Barr. I don't think this is a stock that you would look at, but let's go look at PTCT. PTCT. So this is a therapeutics. So that's going to fall into the no-fly zone for me. This is a biotech pharmaceutical stuff. So I'm not interested. However, if you look over here on the left-hand side of your chart, you can see that I think this is what you're referencing, Tom, is we are in this little area of demand. I would argue have gone through it. Now, I don't know what happened. I'm assuming they missed some drug approval, but let's click the headlines here. PT's European Authority gives thumbs down to PCT Therapeutics. Okay, there you go. Analyst says it can overturn the challenge. Well, this is gambling in my opinion. So, Tom, PTC at demand, I don't think this is a normal demand zone. I don't look at pharmaceutical drug stocks in the same way I would look at a semiconductor or a food company. I really don't like this one. Yeah, it wasn't you, Tom. It was different, Tom. Good. I wouldn't think you'd be trading this type of stuff. This is a conversation we've had many times in this program. I'm a speculator. I'm not a gambler, and I really wouldn't touch this. I think this is a hard pass for me. Even though you could make the argument that you're down near that demand zone, which goes all the way back to June of 2022, I don't like it. I'm not going to mess with the drug stock, especially if they just miss approval for the European Union. I don't even know what drug it is. I don't particularly care. This chart doesn't look that great anyway. It looks like just lots of fluctuations and volatility. But if you're a gambler, go ahead and take that shot. I wouldn't. Just certainly not for me. Too risky. Yeah, falling knife theory, I would agree with that one, Margaret. But I'm okay with I'll be honest, I don't mind catching a falling knife. I'm okay catching a falling knife, but I want to catch that falling knife right at a demand zone. And this picture actually does illustrate that, right? It shows $25 is that area where it ripped out of back in 2022. Great. But it's the industry that I'm not comfortable with, right? If this was, let's say that this was an automaker or a search engine. Like if this was Google, I would be singing a different song right now. If this was Google or Amazon or Intel or KLA-Tencor or hell, even AT&T, I'd look at this and go, okay, I might take a chance at that. You've got aggressive sell-off. It was up at $60 back in May. I think there's opportunity here. But personally, because it's a pharmaceutical drug industry type thing, nope. Automatic no. I don't even have to think about it. Nope. Makes it easy. That's why I love rules. Otherwise, yeah, I'm okay catching falling knives, but I want to enhance the probability of me getting the right price by using demand zones if it's falling like that. Anyway, good point. Let's see, Mike. Most of all the upgrades on Dish are over $10. Then Raymond James upgraded to buy, strong buy. Remember, The only reason these guys are issuing upgrades and downgrades is to benefit their position, not their customers. Just know that going in, right? They're gonna say things like this to benefit themselves, not the customers. So if you believe in upgrades and downgrades, which we've talked about before, then you are being manipulated by the system, and that's exactly what they want. You have to break those shackles of financial industry oppression. They're convincing you to buy Dish. So let's just go back to Dish here real quick. Now, the question I would ask myself is, would I feel comfortable going short Dish now? No, because it's a $6 stock. But if this thing was up at the $20 or $30, I would willing to bet you that this is going down. All right, I'll put another vertical line here, and I'll make a comment on this chart. And I'm just putting Dish is going down, and it's going to have the date at the bottom. So I'll hit OK. I'm going to put that right here. Dish is going down right there. Remember this conversation. Now, it might have a little bit of a surge to the upside, right? It might move up. Who knows? Maybe get to the 8. I don't see 10. If anything, it's going to hit that $8, $8.50 mark. But I just don't see it. They got to change and do something. Walgreens Boots Alliance look like shares want to go up, but it's just still watching. Let's see WBA. Let's go WBA. This looks like shares want to go up. I strongly disagree with this. I think this looks like shares want to go down. How do I know that? Because they have been going down, right? This is a problem that's going to get a lot of people to lose and blow their accounts. Is you look at this, and this is going back to Margaret's comment, this is the falling knife theory. I have a feeling, Michael, like you're searching for all these ones that are just downtrodden and slaughtered, saying one of these is going to be a good buy. Now, let's be honest, Walgreens Boots Alliance probably in the long run will be okay. I would certainly much rather own Walgreens than Dish, because just the business model, right? People are always going to need that convenience store to go buy drugs and stuff, and it's like a 7-Eleven and a drugstore combined. It gets you your Walgreens, your Rite Aid, and things like that. So all in all, I like the company, but something's fundamentally wrong right now. My guess is it has to do with earnings, but this doesn't look like it wants to go up. It looks like it had a tiny little bounce. Trend is your friend to the bend at the end. There is no argument from anybody here that trend is down, period. Scott McCork says, catch the falling knife when it hits the ground. Yep, exactly, Big Ab. That's a good way to look at it, when it hits the ground. I'm a fan of that. All right, I think I've already gone way too long for today. There was one other thing that, what the heck was it? I didn't write it down. Someone asked me, could you, on the end of your shows, talk about what you're looking for tomorrow? Sometimes I don't have time by the time I get this show done to look at things that I'm interested for tomorrow. But I did today. So maybe I'll do it on Fridays. I don't think I can do it daily, but we'll see. If I have time and I do the research before, I'll just show you things I'm looking at. And again, none of these have to come to fruition. I'm just looking to start with short-term trading opportunities. So if we look at the markets for Monday, right? And most of my stuff that I look at is based off of either coming into supply and demand zones or having some technical pattern shape. Something looks good. So you had DHI was one that came through a filter for me, because you have this hammer formation. Now, again, now that I've been going off on trend is your friend, this is a hammer formation, and it's after a fairly sharp decline in price on high volume. So I'm looking for it to open below the high of today's candle, which was going to be, the high was 113.32. If I get an opening on Monday below that and then starts to rally, I will look for, a move up to 115 or possibly even 118. So that's one I'm looking at is DHI. Another one is Northrop Grumman, NOC. NOC. And again, I just have a list of different securities. There we go. This is 3 month. We don't want 3 months. Let's go daily. And a similar picture, but this is a shooting star. So you had a high volume shooting star into overhead supply. I mean, this is actually a really great setup for a potential short. Now, again, it doesn't mean it has to happen. There's no guarantee this is going to go down on Monday. However, today we shot up, came right up into the top of that. Let me get that supply zone there. There you go. We hit it today and already started selling off. So in this case, if you're an Online Trading Academy graduate, you would have been going short when it hit that overhead supply zone, which is between 434 and 437. Well, we're finishing right now at 433.5. If we start to close below the lows or move below the lows today, I like that as a potential short opportunity. What else do I have? That was another one. EXC. The only reason, I'm not a huge fan of this one just because of volume. But you did have a volume spike in what's called a dark cloud cover. This is a bearish reversal formation after a huge run up from $39.50 to over $42 in 2 weeks. So I like the pattern with high volume. It's a bearish indication, bearish formation. Looks good to me for a short opportunity on EXC. That's Exelon Corporation. I'll give you two more, and then I'll show you one more, and I'll show you one I really like, which is probably my favorite for next week. NiSource, same thing. You've got a gorgeous run up. I mean, you're talking 7-8 days in a row of just nothing but up. Percentage-wise, this is a gorgeous looking chart. I will go to the low point here, which was on September 6th, to our high. This thing moved over 7% in 7 trading sessions. And you have a shooting star formation, which is actually called a gravestone doji right at the top. So, trade's easy for this one, right? You put a low right across today's bottom, which is, I think, 27.63. If we open up above that and close below it, boom, Bob's your uncle. There's your short trade. I think that will probably be a pretty decent one. And here is the last one, the one I like the best, Duke Energy. You guys can see why. Look at the volume on today's move for Duke Energy. Massive. It's well over double the normal volume, and it's a shooting star, and it's into supply. So if I'm looking at probability, I've got these check boxes, right? Oh, is it in supply? Check. Does it have a hammer formation, shooting star formation, reversal? Check. Is it on extremely high volume? Check. I mean, this one checks 3 really important boxes for me. Does that mean that Duke Energy has to sell off on Monday? Hell no. Absolutely not. But if I can get it to open up anywhere above 94, 93, and then start selling off that day, that might be the beginning of a nice pullback here. There isn't any real clear demand zones for it to pull back to, but anyway, for the gentleman that asked, I can't think of your name right now because I didn't copy it over. Those are about 5 things I'll be looking at for tomorrow. Of course, Jimmy says profit taking. Yeah, most likely. And great, take profit. I just want to be short when you do. When that thing starts taking, I want to make sure I get a little bit of meat on the bone, so to speak, for myself. So Monday, you've got nothing on the economic calendar, earnings calendar that's really going to drive the markets. I think you're going to get a lot of thin markets on the Monday and Tuesday and Wednesday until we get that FOMC announcement. We'll talk more about that FOMC when we get to that point later on in the week. So, DBJ says, with the Fed meeting this week, do you anticipate that the markets is setting up for their news? Yes, I do. I definitely do. I wouldn't buy Duke where it is trading. Yeah, I wouldn't buy Duke either. I'm talking about shorting it. I'm talking about betting this thing's going to go down and profit taking. You know, if we get a pullback, and I know we've got some Fibonacci fans here. Let's just do a Fibonacci retracement from wherever this move started to where it ended. And a 38% retracement is very normal for people to focus on. If we got a 38% retracement, you're looking at this thing dropping from 94.93 down to about 92.20. So $2.70 worth of profit in that one little drop right there. That could be pretty darn good, particularly if you're using options. Anyway, just sharing that with you. Okay, that is going to wrap it up for me for today. We went through the economic. I showed you a couple trades, go down. So yeah, that's it. It is Friday. I'm going to wrap this up before it becomes a 1-hour show, which I was trying to make this a shorter one. For those of you who are new to the program, which probably aren't that many out there, if you are new, hit that subscribe button. I do the show Monday through Friday, typically from 2 till right around 2:45 to 3 p.m. If you have topics, questions, feedback, put them down below any of the YouTube videos, or you can put those, you can email me at TraderMerlin@gmail.com. Joe Little, thank you very much for that thumbs up and the monetary contribution. It should be a fun local whiskey drinking evening for me tonight. I'm glad to be back home in sunny Southern California, away from the oppressive heat and humidity of Jamaica, although I did like the all-inclusive, easy living down there in Jamaica. But good to be back. Thank you guys for the patience this week as I took some time off. I will be teaching a class in Irvine, California, first week of October, so just setting you up there. Might be a little bit of time off. But Joe, thanks for the contribution. The rest of you, thank you so much. Hope you have a fantastic remainder of your weekend. Do something fun. I will see you guys all on Monday. Take care.